Elon Musk became the world's first trillionaire on a company that loses money.
Yes!
SpaceX reported a net loss of $4.3 billion in a single quarter this year, according to its own IPO prospectus. And on June 12th, the day it went public, that money-losing rocket company is what tipped its founder past $1 trillion, richer than any human who has ever lived. He didn't sell a share to get there, he didn't earn the trillion, and most of it he can't actually spend. Before you file this under rich people problems, the exact piece of accounting that crowned him is the same one quietly running on your house, your 401k, and that crypto you keep refreshing at red lights. You have felt like Elon Musk before, you just didn't have his numbers. It's time to pull back the curtain on what the world's first trillionaire actually means, and why almost none of that trillion is money Elon Musk could ever touch. Let's set the scene, because the scene is genuinely historic. SpaceX priced its shares at $135 and listed on the Nasdaq under the ticker SPCX. It opened at $150, ran as high as $176 during the day, and closed around $161, up about 19% from the offer price. It raised roughly $75 billion. That makes it the biggest IPO in history, full stop. By the closing bell, SpaceX was valued north of $2 trillion, the sixth most valuable public company in America. That public price, stacked on top of Musk's existing Tesla holdings, pushed his personal net worth past $1 trillion. CNN, NPR, CNBC, they all ran the same headline that afternoon: World's First Trillionaire. It is, by any normal measure, an absurd and impressive day. Now here is the part the headline skipped. Musk didn't sell anything. The IPO was made up of what's called primary shares, which means the $75 billion it raised went to SpaceX the company to build satellites and data centers. It did not go to Musk the man. He walked out of the largest payday in financial history, holding the exact same number of shares he walked in with. So what changed? Not his stake, just the price tag the rest of the world decided to staple to it. That distinction is the whole game, and once you see it, the trillion starts to look very different. Here's the math behind every richest person alive headline you have ever read. It is not complicated. You take how many shares someone owns and you multiply by the last price those shares traded at. That's it. That's net worth. The key word is last. Not average, not guaranteed, not in the bank. The last price. One transaction between two strangers sets the number that gets multiplied across everything Musk owns. You already live inside this exact mechanism, so let me make it concrete. Say your house is worth $600,000. Where did that number come from? A neighbor with a similar place sold for $600,000, so a website multiplied that out and slapped it on yours. But you don't have $600,000. You have a guess built from somebody else's sale on an asset you haven't sold and might not be able to sell at that price tomorrow. The day you actually try to sell, you find out what it's really worth, and the act of selling can move the price against you. Musk's trillion is that same guess scaled up by about $1 million. SpaceX got a public price. The price got multiplied by his enormous pile of shares, and a number with 13 digits popped out. And here's where it gets interesting, because the guess is a generous one. The research firm Morningstar ran an actual discounted cash flow model on SpaceX, the standard way you value a company off the money it brings in. They came back with a fair value of $780 billion. That is less than half of the $2 trillion price the market slapped on it. The same week, the company was posting billion-dollar quarterly losses. So the market is very obviously not pricing what SpaceX earns. It earns negative money. It's pricing what people believe SpaceX will one day become: 100,000 satellites, AI data centers in orbit, a city on Mars. None of that is revenue. All of it is faith. And the company isn't even hiding it. SpaceX President Gwynne Shotwell told a pre-IPO livestream in plain English, "I do not want to focus on quarterly earnings." She added that what investors need to understand is that the work is very futuristic. Read that again. The person running the company is openly telling you not to look at the earnings because the earnings are not the point. The point is the future you're being asked to buy. When the operator tells you to stop checking the books, the stop price is no longer a fact. It's a mood. That is the actual engine here. $1 trillion of net worth is not a measure of money Elon Musk possesses. It is a measure of how much the market currently believes his story, multiplied by his shares. Musk is, arguably, the most effective belief merchant alive. $1 trillion is simply what that belief is quoting at this week. So if net worth is just the last price times your shares, then the obvious problem is that the last price changes every few seconds, and SpaceX's did something violent. After the debut, the stock kept running. By June 16th, 4 days in, SPCX touched about $225 a share. Then it fell off a cliff, roughly 35% in 3 days. That collapse erased somewhere around $600 billion in market value, according to trading data compiled after the drop. Sit with that figure. $600 billion of value erased in a week, while Musk did nothing. No rocket blew up, no fraud surfaced. He committed no error. The number just got revised, the way a Zillow estimate gets revised when the comparable sale down the street falls through. The crowd that agreed on $225 simply stopped agreeing. This is the part nobody puts in the Trillionaire headline. The same mechanism that crowned him on Friday quietly uncrowned a big chunk of him the following Tuesday. And it will keep doing that in both directions every single trading day for the rest of his life. As I write this, SPCX is back around $153, miles below that peak. A man whose fortune has a daily high and a daily low is not holding money. He's holding a position. Money doesn't fluctuate 35% in a week. A bet does. And the world's first trillionaire is, in the most literal sense, holding a very large bet on himself. So if the trillion isn't cash, and it won't even hold still long enough to brag about, why would anyone build their entire life around growing it? Why fight a years-long battle for a number that evaporates by hundreds of billions over a long weekend? Because the number was never the prize. Listen to what Musk himself keeps saying when people accuse him of greed. On a call with investors, talking about why he wanted more Tesla stock, he said flatly that it wasn't about spending. He wanted enough voting control to have, in his words, strong influence over the company, but not so much that I can't be fired if I go insane. That is not a man asking for a bigger paycheck. That is a man asking for the keys. The Tesla pay package proves the point better than any quote. Back in November, Tesla shareholders approved the deal worth up to $1 trillion in stock, passing with about 75% of the voting shares. But look at how it's actually built. He gets nothing unless Tesla's market cap climbs from roughly $1.5 trillion to $8.5 trillion. The shares vest nothing at all for the first 7.5 years, and when they do vest, they come as stock he can't immediately turn into cash. Think about what that structure is and isn't. A paycheck is money you can spend on Friday. This is the opposite of a paycheck. It's a mechanism engineered to hand Elon Musk a larger and larger share of the votes, locked up, contingent on the company getting enormous. The wealth is almost a side effect. The voting control is the actual product being purchased. The SpaceX IPO runs the same play from a different angle. The offering raised $75 billion in fresh cash, but that cash went to the company, not to him, and the structure left Musk firmly as the controlling shareholder. He even reserved up to 30% of the IPO for everyday retail investors. Reuters reported that's at least 3 times the slice a normal IPO hands to regular people, which is usually closer to 5 or 10%. That looks generous, and on one level it is. But think about who that puts on the share register. The fans, the believers, the Starbase tattoo crowd, the people most emotionally invested in the story and least likely to ever organize into a bloc that votes against him. He didn't just sell shares, he handpicked the most loyal possible owners for them. Every single structure points the same way. Musk does not optimize for spendable money Because spendable money comes with a catch. To get it, you have to sell, and selling means giving up shares, and giving up shares means giving up votes. So he keeps the shares, keeps the votes, and lets the net worth be whatever the market says it is on a given afternoon. The $1 trillion headline is the scoreboard. Control is the game he's actually playing. Now, the objection worth taking seriously. You might think this is all just paper wealth pedantry. Sure, technically he can't spend $1 trillion in stock, but come on, he's the richest human alive. Banks fall over themselves to lend to him, and the genuinely rich never sell their shares anyway. So who cares whether the trillion is real? That's a fair hit, and it points at something true. There's a well-worn move the ultra-wealthy use called buy, borrow, die. You buy assets, you borrow cash against them as collateral instead of selling, you spend the borrowed money, and because you never sold, you never trigger a tax bill. So in practice, yes, Musk can pledge his shares to a bank and walk away with real, spendable dollars without selling a thing. The paper is more usable than I've been letting on. But take that objection all the way to the end and it actually reinforces the point. Two things. First, you cannot borrow against the headline number. A stock that just fell 35% in a week is exactly the kind of collateral that gets banks nervous. They don't lend against $225 or even $161. They lend against a heavily discounted version with margin calls baked in because they know the thing swings. The lendable value is a fraction of the trillion and it shrinks the moment the price drops. Second, and this is the bigger one, borrowing against the shares doesn't change the mechanism at all. It just adds a bank to it. When a lender hands Musk cash against his SpaceX stock, that lender is making the exact bet we've been poking at this whole time, that the market's belief in Elon Musk holds up. He's still monetizing a story, he's just doing it with a banker standing in the middle, both of them wagering on the same thing. The richest man alive borrowing against his own hype is still, at bottom, a man whose fortune is a wager on himself. And not a single piece of that touches his real motive, which was never the cash in the first place. It was the votes. So what the trillion actually is. Come back to where we started. He became the first trillionaire on a company that loses billions without selling a share, holding a fortune he mostly cannot spend. Lined up like that, it sounds like a paradox. It isn't one. It's just what the word trillionaire actually means once you stop taking it literally. A trillionaire's trillion is not a vault of money. It is a price other people agree to on shares he is holding mainly for control that can be marked down by hundreds of billions before the next weekend is over. The headline said Elon Musk got $1 trillion. What he actually got was the entire world agreeing for one Friday in June to quote his belief at 13 digits. The cash stayed exactly where it was. The thing that moved was the votes. And here's why any of this should matter to you, who will almost certainly never IPO a rocket company. The next time your brokerage app says you're up $40,000 and you feel briefly warmly rich, notice what you're doing. You're running Musk's exact accounting. Shares times the last price, a number that feels like money sitting in your hand. It isn't there yet. It's a quote. It can be revised by Tuesday. The only real difference between you and the world's first trillionaire is how many people are currently willing to bet on your story, and whether you'll ever have to sell to find out what it was truly worth.